Good afternoon and welcome to your weekly FX options report. Today is Wednesday, August 10th, 2011. In midweek trade, the major U.S. stock averages continue to see volatility and trade in negative territory. Earlier on this week, on Tuesday, the major U.S. stock averages saw a late session rally on the heels of the latest Federal Reserve comments. Now, the FOMC maintained interest rates at record lows, but the FOMC also said that it would maintain its monetary policy for at least 2 years into the middle of 2013. Now, taking it one step back, after the markets closed last week on Friday, S&P downgraded the credit rating of the U.S. from AAA to AA+ for the first time in history. And in midweek trade on Wednesday, August 10th, there are concerns that France's credit rating might be downgraded as well. As a result of this, jitters are weighing on financials, especially in France, with bank stocks in the nation sharply lower. And moving on to the spot FX market, the dollar is seeing mixed trading against the majors, mostly higher against most of the currency pairs, including the euro, the pound, the Swiss franc, the Aussie, as well as the Kiwi. Now, the dollar is seeing downward pressure against the Japanese yen today. Dollar yen has extended weakness, edging near record lows. Meanwhile, the Swiss National Bank has said that it would increase the supply of francs to stem its recent rally, with dollar Swiss falling to new record lows on Tuesday. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at ICE's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, which is your daily trend opinion, we'll take a look at the major IC FX option pairs, starting out with the AUX, the U.S. dollar, against the Aussie. Now, for that pair, the technical rebound is in the bearish trend. It's seeing a bearish trend. The pair has broken below a bearish trend line, and the preference of Trading Central analysts is long positions above 92.50, with targets coming in at 102 and 104.75 in extension. Now, moving on to the BPX, the U.S. currency against the British pound, it is also under pressure. That pair is posting a rebound but stands below its resistance. The preference of Trading Central analysts for that pair is short positions below 63, with targets coming in at 60.50 and 59.75 in extension. And moving on to the CDD, the dollar against the CAD, the technical rebound is in a bearish trend. The RSI has broken above its declining trend line, and it is approaching its next resistance. The preference of Trading Central analysts for the CDD pairs long positions above 95.75, with targets coming in at 101.50 and 103.50 in extension. Now, moving on to the UI, the dollar against the euro, that pair is seeing a downside pressure as well. Now, it does stand below its resistance, and the RSI is capped by a declining trend line. Therefore, the preference of Trading Central analysts is short positions below 72, with targets coming in at 68.90 and 68 in extension. Now, moving on to the SFC, the US dollar against the Swiss franc, the downside does prevail. The RSI is capped by a declining trend line and remains within a bearish channel. It is also challenging its support. The preference of Trading Central analysts for the dollar against the Swiss franc is short positions below 80, with targets coming in at 71 and 69 in extension. Last but not least, for this segment, let's take a look at the YUK, the dollar against the yen. That pair is also seeing a downward pressure as well, and it has broken below its previous low. Therefore, the preference of Trading Central analysts for that pair is short positions below 79.80, with targets coming in at 76 and 75 in extension. And in our next segment, which is your weekly trend opinion, last week the dollar did suffer new weakness against the majors, but it does remain stronger against the exotic currencies in a choppy trading market this week. In terms of portfolio performance since its inception of August 2007, it is higher by 2,537.02%, and since the beginning of this year, January 2011, it is higher by 702.02%. Now, we do have two trade alerts for you right now, including puts on the BPX and calls on the EUU. Starting off the calls on the puts on the BPX, that pair has broken below its rising trend line and remains under pressure. Now, in terms of calls on the EUU, that pair has rebounded on its support and should post a further advance. Trading Central analysts will also be watching the YUK and the SFC. Next week, Trading Central analysts will be looking at the CDD, the SKA, the NZD, the PZO, and the AUX. And that does wrap it up for your weekly FX options report. Make sure to tune in next Wednesday for your latest in FX option news. Thanks for watching and have a great week.